with my little PowerPoint there. Good stuff. All right, first of all, I want to say tough crowd. Wow, you guys really beat Colin up pretty good. Feel sorry for you there, Colin, but uh, they are a tough crowd here. But I'll do my best to entertain you as well as educate you. Okay, first of all, I got a really controversial. First, I'd like to thank everybody for coming and thank DTI for having me back. Last time I did this webinar, it didn't go so hot, so this time I'll try to do it a little bit better and try to get to some more examples. The markets are rigged and how to make constant profits from them. Without further ado, let's get to it. Get through the disclaimer. Yada, yada, yada. Don't do this unless you know what you're doing or professional. And if you listen to me, don't sue me. A little bit about me real quickly. 27 years experience in the financial markets. I'm currently an FX trader. I've traded my own account for over 10 years. And let's get to some meat and potatoes right now. Okay, I want to start off by saying that I have tested and used almost every indicator and strategy out there. And I've discovered that some of them work some of the time, but they were failing miserably other times. And like many of you, I asked myself, were the markets rigged? Was it possible? Like, how could it always be that I was getting stopped out and the market would move in my direction, but yet I wasn't in any moves? And a lot of people believe that the markets are rigged against them. And so that's why I have this controversial topic. So let's keep moving here. What do you mean the markets are rigged? By the way, if any of you guys heckle me or give me a hard time like you did with Colin, I'm going to send my cousin Vinny here after you, okay? So just beware of that. I'm just teasing. I'm just joking around, guys. What do you mean the markets are rigged? Okay, this is a controversial topic that a lot of people have discovered through the years. What's a market maker? Well, what are the people that are taking my money? Are the professional traders taking my money? Are the market makers taking my money? Are the brokers taking my money? Who's taking my money? If you're not a profitable trader and you're losing more than you're winning, then who is it that's getting your money? Market makers, right? Okay. Well, possibly yes. Okay. Well, we're going to get into that, and I'm going to specifically talk about that today. I've traded stocks for most of my life, but I'm going to talk about that today and show some examples today on the Forex markets. Because I believe the Forex markets are one of the more pure markets to trade for the reasons that the players that are in the markets are a little bit more clearer to see than they are in other markets. All right. And that's where we're going to spend some of my time and show you some examples, all right? Let's move forward here. Okay, so after all of that study of indicators and everything that I went through, what did I come to the conclusion of after 27 years that I kind of knew in the beginning when I was first a floor trader? Well, what I discovered was that if you want to be an off-the-floor trader and you want to trade from charts, I found that although some of those things, some of those indicators were working and things like candlestick patterns and things like, all the various indicators out there were working some of the time, what I discovered was to go back to pure market order flow, okay? And I'm going to get into what I mean by order flow and market structure. Colin commented earlier on order flow saying that what do you call it? He had a way of reading that by looking at, he had a way of reading that by looking at the various orders that were sitting on the Nadex platform. And I think that's really good. I think that's a really powerful tool. However, I think that you don't really need that necessarily if you can just learn to look at the charts through the eyes of market structure. And so that's my next thing that I would like to discuss with you. First of all, to look at the market through the eyes of order flow, and then to understand market structure. And that's the real key to reading charts. And when you can get away from looking at dojis and spinning tops and cloud covers and ichimukis and moving averages, and when you can get away from looking at a chart for all of the things that it is, and you can just get into the meat and potatoes of looking at what's the order flow and where is the market structure, then you can, and you understand this most important thing that I'm going to say here, which is right here. The market is in constant search for liquidity. And when you understand that, put this, if you can imprint this in your brain right now, it'll do you a lot of good. The market is in constant search for liquidity. When you can understand these three factors, then you can make more consistent profits than anything else that I've ever seen in my experiences so far. Okay. So what do we mean? How do we understand order flow? How do we look at market structure? And then how do we put it all together and understand that the market is constantly searching for liquidity? Okay, well, here's some of the steps that you can take. Okay. The first step you can do is to learn how the markets actually execute orders. Now, we all know what a limit order is. We all know what a market order is, and we all know what a stop order is, which is pretty much, the basic order types. I mean, sure, there's filler kills and there's buy stops and buy limits and those things. But the three basic orders are a limit order, a market order, and a stop order. Okay, and when you understand that, sorry guys, just one second. When you understand how those orders are actually placed on a book and the way those orders are distributed throughout an order book, then you can begin to exploit that. Okay? And so one of the ways that you can do that is by actually looking at the charts. And I'm going to get to some examples as I move along here. But I just want to set this up properly so that you understand when I actually pop my charts up what I'm talking about. So the next thing that you need to understand, well, I don't need to, but next thing you want to understand is who the players are and what they actually do. Okay? So in the stock market, we do have market makers that do have access to the order books. In the Forex markets, it's a little bit more different. It's far more distributed, and you really don't have anybody that has access to all the books because the books are all spread across the major exchanges as well as each individual broker and market maker and ECN. And you also want to understand what the players actually do. So there's two types of players that are in the markets. There's those players that are in the market to make money from money, and there are those players that are in the market basically to hedge their own businesses. Okay, companies like Toyota, Ford, General Motors. A lot of the times, those players that are in the market, what they're actually doing is they're actually using the markets as a hedging vehicle rather than using it as a way to make money. So that's what I mean by who the players are and what they actually do. And I'll get to this on the chart. You'll see what I'm talking about. Then the third step you want to do is you want to find out the areas of order buildup, and then you want to exploit that. Okay, let's see if I can put this all together now over some examples. Examples. All right. Now, I found these examples, probably took me about 20 minutes to find a few examples. But what I want you to do is, by the way, can everybody see my charts clearly? I want to make sure you guys can see my charts okay, because I can't see the screen anymore for some reason. The Novia screen is gone now. No, that's not it. Sorry. Okay, there. Now I can see the Novia screen. Okay. So everybody can see my charts, okay? Okay. So I found these examples really quickly in a very short period of time. I wanted to find 3 examples, all right? I wanted to find an example of, sorry guys, sometimes I get private messages here and I have to check them. I wanted to find an example of where a market was rising, okay? Now, I'm going to use the 1-hour charts just because they're a little bit more obvious on the 1-hour chart, so I wanted to bring this up. Now, if I was looking at this 1-hour chart of the euro right here, and I were to look at this as a way for me to trade this, what I would do here is if I came into this market and I saw the market was, let's say I came into the market around this time and I saw the market had a big up move, I would see that the order flow was that there was a lot of buying pressure. Now, I don't need anything else but a visual representation of any chart to figure that out. Now, it would help if I had the book and I saw where the orders were distributed, but I don't necessarily need to see the book. You can put together an imaginary order book inside your head simply by looking at these charts. And I would see that the market had a strong move up. And then as the market continued along here, the market had a retracement here, a move back here, a retracement, and finally went higher. Then the market begins to obviously make a higher move here, and then it comes down, and we see a situation where, oh, right here is where I wanted to point it out, okay, where obviously in this particular situation, if I were to look at this chart and say to myself, okay, Steve, where are orders building up? I know there's a lot of buying pressure, okay, and where are orders building up? Okay. And one of the things I would do is I would probably mark off a level down here saying that there's a lot of longs in this market right now, and those longs are trying to protect their profits. Okay? And so any stop levels are probably going to be placed here at this point in time. All right? What happens to the new longs that entered the market? Well, the new longs that entered this market at this point in time, basically, they're taking some heat right now. All right? Any new long that re-entered on those new highs is taking some heat right now. Where did those new longs enter this market? Well, those new longs entered this market. I can see here by the buying pressure enormously right here that at this point in time is where those new longs entered this market. I'm sure you guys are asking me questions. I can't see those questions, but I promise you I'll get to them in a second. So I would then draw what some of you would call a trend line. Okay. I don't call them trend lines anymore. I would then at this point in time say, okay, where would anybody that is going to enter this market want to take some profits? Yeah. As we see here, as the market pulled back to an area where buying took place, brought the market higher, selling took place, buying took place, took out those highs, selling has now taken place, okay? I would see at this area that there is a large amount of order buildup up here, all right? And so I could exploit the order flow, and the order flow is basically telling me the market is in, if you want to break it down to a simple concept, the market is in the middle quadrant of a chart, pulls back down to the bottom quadrant, goes to the middle quadrant, pulls back down, goes to the top quadrant, pulls back down to the middle, and boom, at this point in time, this little candle right here has basically taken out all of these stops that were building up along this level. Okay, so remember before I told you the market is in constant search of liquidity. Okay, now when I know that the next liquidity level or the next buildup of liquidity level is, I can now exploit it. And so in this particular case, the market would have a very high probability of moving up and grabbing the higher liquidity level right there. And as you can see here, do you think it's coincidental that all it did was go up, hit that liquidity level, and move back down? No, there's no coincidence there. Okay, this was a move where the market moved from one area of high liquidity up here to lower liquidity to higher liquidity. All right, now what do I mean by liquidity? Well, what I mean by liquidity is I mean areas of order buildup. Okay, so I'm going to move on to another example, but I wanted to make sure that you guys understood that first example, so I'm going to answer any quick questions that you have. Ah, great. Warren's going to heckle me. Way to go, Warren. I'm coming for you soon, buddy. All right, so let's move forward. Warren must be one of those other guys that's on here selling something. So he doesn't want anybody else taking his business from him. All right, now here's a situation where I'm going to move to the next one. Just move forward here. All right, so here's a situation. I wanted to show you a strong market where order build up. Okay, now I'm going to show you a time when the market changes and is a consolidation area. Some of you would kind of recognize that as a consolidation area. So over this period of time, the market has been moving down, and as the market moves down, okay, moves lower, okay, and as it moves lower, I want you to get used to drawing levels on your charts, okay, of where you think orders are going to be building up. That's the whole reason I'm here. I want you to just on your charts draw levels where you think orders are going to build up. So, for example, if you were short this market from this level here, where would you place a stop? If you were in profits, you'd place your first stop here. And if you were in more profits, you'd place your first stop above here. And if you were in more profits, you'd place your first stop above here. Right? So it's safe to say that anybody that is short on this move is going to have their stops down here. So it's very simple for me to look at this chart and to be able to say that there is a large accumulation of orders here. It's a very large accumulation of orders here. Now, in this particular case, if I had a good reason to go long, and I can't really get into those reasons in the course of this 1/2 an hour seminar, if I had a good reason to go long on this chart, this would make a perfect target, wouldn't it? Because I would know that there is a large buildup of orders, and I know markets move from areas of low liquidity to high liquidity. That's what they do. That's the whole purpose of a market, okay? If you can understand that key concept, a market cannot sit still. It has to find liquidity. If it can't find liquidity, brokers don't make money, market makers don't make money, the economy freezes, everything stops, and everything goes to the crapper. So what the market has to do is as the participants in that market have to find liquidity, and they have to move the market from one area of low liquidity to high liquidity. So in this case, if I had a good reason to get long, and once again, we won't talk about those reasons to get long, I would know that there's a very large buildup of orders down here. Okay? And as you can see, the market comes down into this area, again, takes out lower liquidity. We got liquidity once here, got liquidity twice here, couldn't get to that liquidity up there, got liquidity again, okay, moved from low liquidity, higher liquidity, and now, as you can see here, the market must move back up and grab higher liquidity eventually. Okay, now I showed this example. It's a little bit difficult because I wanted to show a sideways market. Okay, I'm showing 3 examples here, not just necessarily one example. So let me just move forward here because I don't have much time. I want to find another example here. All right. Okay. Now here's an example of where a market, how you find a short in the market. Okay. All right. So here the market participants are now starting to sell the market. We can tell that just by the movement of the chart. It doesn't take a scientist to figure that out. Okay. Once again, drawing some levels here. Where would stops build up if you were short? Okay. Where would stops build up if you were short? Bam, right through that level, all the way down again. Where would stops build up if you were short? Okay. This is what we're asking ourselves. Where would orders build up if you were short or long? Okay. Bam, market moves down again. Okay. That's an example of how to exploit a down move. Okay. Market must move from areas of high liquidity, of low liquidity. It's low liquidity up here. There's higher order buildup down here. There's no more order buildup here. The market must go and get those those areas of high order buildup, and then it can move down further, okay, and et cetera, rinse, repeat. I'll show you an example on a 5-minute chart just to give you an example of what I'm talking about here. Today I came in to the GBP. Now you can do this on any time frame chart. I just took these 3 examples randomly because but it does happen on all time frames, okay? I came into the GBP this morning and I saw that the market had basically moved down, had gone up and got some liquidity up here, tried to go higher, couldn't go higher, got some lower liquidity here, and then moved from this area of low liquidity up to this area of high liquidity, got all the orders up here, came back down, got more liquidity here, and then came back up here and got this liquidity up here. Orders areas of low liquidity, high liquidity, low liquidity, high liquidity, low liquidity, high liquidity, low liquidity, high liquidity, low liquidity, high liquidity. Okay, so coming into today, when I was looking at how to exploit this chart on the GBP, I was watching particularly this area right here of where there was going to be some order buildup as a way for me to get long, because I know that it's been going from low liquidity, high liquidity, low liquidity, high liquidity, low liquidity, high liquidity. I saw this area again come down here, and I said, where's the next area of order buildup? Okay. And we just so happen we got this area of low liquidity. We just so happened to have a report out today, and as you can see, bam, 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 bam. Just like that, it did exactly what it was doing all day long, going from areas low liquidity, high liquidity, low liquidity, high liquidity, low liquidity, high liquidity, low liquidity, high liquidity, low liquidity, high liquidity. Okay, now I know it's very hard in 30 minutes for me to explain that, but I can tell you that if you start to just draw off levels on your charts and you start to think of the market from in that perspective, then it'll help your trading quite a bit. I only got about 5 minutes left right now, so does anybody have any? I know it's some big concepts here, but all I want you to do is to just start to think of the market as where orders would be building up. Okay, and the other thing I would like you to do is not to think of the market from the area of stop running, because I think stop running is a myth. Okay, I know somebody said, you know, the market goes up and does things to get things, is out to get you, and that's why I kind of my topic, the market is rigged, is kind of more of a joke more than it is anything. It's the markets aren't really rigged. The markets are just moving up from areas of low liquidity to high liquidity. All right, so let's see if I have any questions here. James Brown, why don't you go back to 1995 and draw some more levels and back then, okay? How is this different from market profile? TJ asked me. Excellent question, TJ. Market profile shows you where it is a very good clue to, and I used market profile for years. I read Stottlemyre and Dalton and all those guys, and like I said, I've been around. Yes, I do, James. Thank you very much. And no, I'm not. I'm simply a grinder. I've been doing this for a long time with a very small account and been making a very comfortable middle class living. Thank you. Upper middle class living. But to answer your question, TJ, how is it different from market profile? Well, I did use market profile for a very long time. And I found, and two good questions, Rick, I'll get to yours in a second. I found that market profile was too complicated. And I had to have a special charting package to do it, and I had to have everything. I think you can find just as much information on a simple chart than you can on market profile. I don't necessarily need market profile to see those areas of order buildup. But if you want to use market profile doing it, then you can as well too. Okay. Rick says it's the same as support and resistance levels. Yes and no, Rick, because support and resistance levels are also areas where orders build up as well too. All right. At support and resistance levels, orders do build up. But what comes first, the chicken or the egg? Okay, and sometimes it doesn't always. You can't always see it as clearly on the charts as you can. You can't always see it on support and resistance levels as you can on the chart. So, for example, if we take a look at this GBP trade here, I really couldn't see support and resistance areas as clearly as I could see the order flow and how it was moving from high liquidity, low liquidity, high liquidity, low liquidity. All right. And so my challenge to you is no matter what time frame you're going to look at, basically try to understand that it doesn't matter any chart. I don't care. I could pop up any chart in here right now, and I could just basically go back, and I could say where is orders building up, and how is it moving? Okay. I do have for intraday trading. I do have a very specific number of candles that I want to see because I want to see the Asian as well as the London session. Okay. Any other questions? Oh, a second. For those of you, I have done some other webinars. If you want to Google my name or if you want to Skype me or email me, I do have some information out there. I don't have a website or anything like that. I've been trading my own accounts for my living. That's what I do. I do managed accounts and I do some private coaching, but I'm not really in that business. But I'm also more than happy to answer emails or answer questions to any of the Trading Pub people. Please feel free to Skype me any questions. If you want to watch me trade for a couple of hours a day, I'll happily show you that on Skype. Tony asks a very good question. He says, can these apply to stocks and indexes? Absolutely, Tony. I made my living for the majority of my 27 years in this business as a stock trader, not necessarily a Forex trader. I do find, and they do work very, very well on indexes as well too, Tony, okay? Hugh asked, there is a market mate out there with a camera in my living room watching me place my stops so they know where to knock my 50 pence out. Yes, there is, Hugh. There is, but it's not really a market maker. He's not out to get you personally. He's out to get the majority of you. Okay, that's why the name of my topic here is kind of a joke. Okay, he's not out to get you personally. The markets are not rigged. It's a bit of a joke. What I meant by that is that the markets are in liquidity fluxes all the time. And when you can start to look at the market and price and order flow through the eyes of where is liquidity and where is the market going to seek that liquidity, then you have a way of doing that. So I'm done now. I'm done with my time. I hope you guys enjoyed it. And like I said, please feel free to email me or Skype me. I'll answer all questions on Skype. And if you want to give me a call, please just call after market time. Thank you for your time. And thanks for not heckling me too much there, Warren. I don't have to send Joe Pesci after you.
All right, thanks, Steve. And guys, we're going to bring in Brad Powell now. And Brad, I understand you're going to be projecting from your screen, so feel free to go ahead and bring that up. And as soon as you're ready, take the room.
Hey, Chuck, can you hear me okay?
Yeah, I've got you. Might want to go up just a tiny bit, put you about on the same level as Steve was.